Hey guys, my name is Ruben Nathan, and in this video we're going to go over the NIO trade that we last reviewed. I'm gonna go over the NIO trade that I talked to you guys a few weeks about, which we got into the $6 strike call for anywhere from 15 to 27 cents, where we called it out at, which are now valued at around $3 in a couple of months. So, whether you got into at around, 15, 16 cents, that would be a 20 to 1 turnaround risk reward at the moment. If you got in at the higher 27 cents, then you are roughly looking at a little bit north of 10 to 1. And so with that said, as we know, last night, NIO did report earnings, which they beat out estimate sales, they tripled sales, which was a blowout, in addition to the fact that in these market conditions, something that we have seen is how the NASDAQ and just the tech sector is leading the overall market. And then we've also seen that general craze with the Teslas, the NIOs, and the Nikolai as this intrigue for these electric vehicles grows. I believe now Tesla is valued at a higher market cap than Toyota, which is all in all, sector speaking, in between the exuberance of the electric vehicles and the tech sector outperforming Alpha or the S&P 500, is part of the reason why I wanted to get into NIO the previous time. As I said, after the aggressive pullback, I was looking for a 10 to 1 at least risk reward getting into a trade. So I was looking at everything and the pricing of the techs, which is something that I always look at. It's what I've been trading for a long time. And NIO seemed to be doing that because of the way that prices of the out of the money calls were deflated in context to supply and demand range, which I found to be $6 if there was a market rally to be a solid floor, and then a target at around $10 to $12. And so with that said, we're going to go ahead and look into right now where it opened. And oftentimes, and more often than not, whenever something gaps up this much, there's usually a close of the gap. Here we're not seeing that, so I went ahead, and right now it is 8:30 in the morning. So the market opened at about 2 hours ago. In the first 15 minutes, I went ahead and drew the top of the candle range and the first 30-minute reversal, to which I noticed that the high was, contextually speaking, a possible flip zone to the previous time the price was here in the supply and demand range. So the first thing I'm going to do is I'm going to go ahead and point out this 1 minute candlestick chart. I like to get in and out on the 1 minute, especially when I'm trading options, because of the way the pricing, the out of the money calls, or just any calls or puts for that matter, are changed in price as things are free falling, and then as soon as the price tends to stop falling, the option change tends to recalibrate, in which point every 10 cents is a 1/10 of a possible 10 to 1 risk reward. And so for that reason, I like to notice the highs and the lows and the pattern formation of the overall market, the daily, the weekly, 15-minute, 4-hour, etc. But I like to get in and out as it's coming into a demand or supply range. And I like to get in and out based on the 1 minute if it's an appropriate demand zone before it closes. And so with that said, looking at the 1 minute, we can see here, I'm going to go ahead, and I know I have them pretty close here, but we're going to go ahead and point out the high. And right now we're going to point out the low. And as we can see here currently, it didn't break this anchor of the open, and then it was higher highs, higher lows, higher highs, higher lows. It retraced a little bit, but again, it did not break that anchor, which if it did, it would have probably closed the gap. With that said, because it did test the last time that price was here, so now we're going to go look at the daily, and we're going to go way back in time to March 1st of 2019, the last time price was here in this range. And if we look at this, now we're going here at the daily. Now I'm going to go ahead and show you guys a 15-minute. I know this patterns are a little bit tight, so I would recommend, because of the 4K resolution and the way YouTube or your network might work, I would recommend you open up this stock and look at it yourself with your own trading platform, as we are talking about it right now. So with that though, I will point out to the time frames here at the 15-minute candle, and I like to look at time frames in the context to the last time price was there and the pattern formation in the previous time, which is a little bit different than how most people, I believe, teach time frames. But last time price was here, as we can see in this range, this whenever price once again kind of did the same thing. It retested, or it gapped up, and then it was forming here on the 15 minutes, once it retested higher highs, higher lows, higher highs, higher lows. And then here, as we can see here, the wicks, which were unfilled orders at this time because it is under this red candle, were unfilled and then they jumped up. So now we're in the same zone. And because last time these were unfilled buy orders, there is a potential for this to become unfilled sell orders. And for that reason, I found to be appropriate to consider unloading a little bit of those calls that were at this point 15-1, as it was the peak of the high of the day, but contextually speaking, it was also the peak of the flip on the 15-minute time frame last time price was here regarding the unfilled orders of the demand wicks, which could turn into supply if this were to happen. But obviously, I am buy side bullish appertaining to NIO, but that was my logic for unloading some in the 30-minute reversal of the first 30 minutes of the market open in the US market. So with that said, as we can see, we are now dancing in between this range of 871 and these unfilled orders were here at 917, which is actually, I believe, exactly the high. Exactly, yeah. So right now on the current present time 1 minute candle, it was right about the high was the base and the basing of this unfilled order here. Last time price was here in the context of the 15-minute candle. With that, I do presume that once it rips out of the quarter, so probably 922 to 925, I do presume and expect it to rip to at least a 975 quarters considered, but really I would look at the supply zone here. So now I'm going to move these green ones into my next potential target here. And I made them a different color to make it easier on the eye for you guys. So I would consider actually, I just realized that it's exactly right around the quarter, looking at fractals of this next zone. So I would consider this going to the 990. So realistically speaking, test and hover around 975, probably rip through and go all the way to 10, and then hover at around right here at 10 to 1025. And so at that point, I would consider unloading a little bit more of my shares, but I would still want to have, personally speaking, no less than 2/3 of my position left, as I would presume that this would rip. As also the way Tesla and the Nikolais have played, the way the banks and institutions are moving around sector rotations and now within industries, within overall sectors, I would presume and hope to likely see a rip up. And so for that reason, I do not have a target for the final trading plan, according to my trading plan of my remaining calls. And so upon assignment though, because if I get assigned and then they pull back, it moves from the option to then the obligation of the actual stock. At that point, I would consider recalibrating my position. Again, when I got into this position, the out of the money calls were very deflated in the context of the supply and demand range, which I'm going over right now. And so at this point here, I would consider quite strongly to really hold my remaining position. Again, nothing I say is a buy, sell, or hold recommendation. I wanted to go over this NIO trade because it's something that I had talked about previously, and I have said before, I really tend to focus on the best risk reward in the context of what I'm seeing, and I do use correlations, sectors, and what have you to find that and dissect that, and then at which point I find what is the best reward for the position at play that I am considering in the context of supply and demand range, Fibonacci, and other things. But overall, price is king, and I found NIO to be an excellent price contextually speaking to the rest of its comparative sector, not to mention that bills may be passed to further incentivize people to go to a cleaner energy, which would be a monumental move for a stock like NIO. In the same respect, markets could significantly retrace given the current conditions of the overall market. And for that reason, it is another reason I chose to go with out of the money calls, because in the money, oftentimes you can lose much more than if you control the underlying stock because of the extrinsic value and the inflation of that extrinsic value. The break even could be higher, futures can gap, and you are required to use a lot more leverage. And it's depending on the way you trade, it can be a little bit trickier to play out your risk reward. And Obviously, there is Forex. Again, during these markets, it's whiplashing quite a bit and there's a lot of slippage. So that is why in this market condition, and for this reason, I went with out of the money calls, because the most I can lose is what I paid for it. And if it goes into the money, then obviously the risk reward becomes exponential. If it expires worthless, I paid that much less for it. And so I'm still playing the same move. It's just a better risk reward. So with that said, guys, I hope this video was helpful. I know this is a 4K display. I am working towards moving to a 1080p display as I am filming this for you guys, so it's more visible to everyone, not only if you're watching this in 4K on YouTube or otherwise. So I would recommend that if you're watching this video at the moment, like I said at the beginning of the video, open up this chart and look at it yourself. Again, you can lose all or more of your money in your trading account. So this is by no means buy, sell, or hold recommendation. This is simply for entertainment purposes only. Sending you guys so much love and light. I hope this was helpful, and I will see you guys next time.